Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to silverradio.fm. Available online at housestreet.com, talkdigitalnetwork.com. Welcome to silverradio.fm. Podcasting in 0.99995. I'm Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
John, what does the spike in the gold-silver ratio mean?
Well, it means that, it means two things. One is that we're probably at the beginning of a nice long bull market in precious metals. And the other is that, people are looking for safe havens, but they're looking for the safest safe havens, which include gold, but not silver. Because silver is partially an industrial metal and partially a monetary metal, which means part of its demand comes from industrial uses, which are dropping like a rock right now. So people are worried that the demand for silver won't be there, and that will make the price either go down or just not rise as much as gold will. So more money flowing into gold, which is exactly how it happens at the beginning of most bull markets in precious metals. The safest names get bought first, which include gold and the big gold mining stocks. And then, once people have booked some nice profits in those safest of safe havens, they tend to look around for what else is like that, but still undervalued. And eventually they find their way to silver. And then silver takes off and outperforms gold for the last few years of the cycle. So I think we're close to that point right now, where silver going forward will outperform gold because it's so cheap. Traditionally the gold to silver ratio has vacillated between, 20 at the low end and 80 at the high end. And which means when it reaches 80, that means silver is very cheap relative to gold and you should buy it. Well, this time it went all the way up to 120 in US dollar terms. Which means that either the relationship is broken or silver is insanely cheap in this cycle. And I kind of, subscribe to the second explanation because silver hasn't changed in any important ways. It's always been an industrial metal and it's always been a monetary metal. And the dynamic works like this as time goes on. And I think it's going to work like that, but the same way, but on steroids this time around is, people make some money in gold and then they are even more afraid of what's happening in the world. They think maybe they should buy some more gold. So they look at what they have to pay for one gold coin, something about the size of a U.S. 50-cent piece back in the day when we had 50-cent pieces. And they think, oh my God, that's all I get for that much money? What about silver? And they look at silver and see, oh, I can get a whole box full of silver for that same amount of money. Silver's gorgeous and I can take out the coin, I can look at them and, that's just a much better way to go. So they buy silver. And then silver goes into shortage. There isn't enough raw silver to turn into coins to satisfy the demand. And then you reach the point where we are now, where gold dealers have to charge really high premiums, or they can charge really high premiums, and they do it and get away with it. And there are very long wait times. So now if you go buy, say, silver eagles, or actually I'm not sure what it's like on this very day, but over the last month or so, most of that time, if you went in to buy some silver eagles or some maple leaves, the dealer would tell you, well, we don't have any on hand, but if you give us your money, over the next few weeks sometime, we think we'll get some in. But we have to charge you a premium of maybe 50% over the spot price. So if silver is $15 US, you might have to pay $22 or $23 for your silver eagles. And that is usually a sign that the market is in shortage and prices are going to go up, and that the physical price, in other words, what you have to pay to get these coins, is the real price, and silver will go up to that price. So we're heading into a time of that kind of a dynamic, or actually we're in the early stages of that kind of a time. And generally speaking, what it does psychologically to people is gets them excited, because when something is unavailable, you automatically wanted more, right? And the people who've already made the decision to buy silver because gold is so expensive are now kind of frantic, because they had decided to put X amount of their savings into silver, and they find that they really can't do it except on those really onerous terms. So they're waiting for silver to become available, and then they've learned their lesson. They're going to buy a ton of it when the time comes. So when and if the supply of silver comes back into balance with the original demand, a new burst of demand is going to come into the market and send it back into shortage. So the lesson from that is that, if you really want silver, you should have bought it a year ago. And if you absolutely have to have it going forward, you buy whatever's available when the time comes, because it's going to get more expensive. Now, one of the reasons that I think that's true from a fundamental macro standpoint, in other words, not just looking at the gold and silver charts, is that we're in a financial crisis that might end up being the biggest one of our lifetimes, and all the governments of the world are responding with massive new currency creation and dramatically lower interest rates. So you're seeing a flood of fiat currency hit the market, and interest rates plunge, which makes the environment that much better for precious metals. Because one of the reasons why precious metals are frequently brushed off by the mainstream investing industry is because it doesn't generate cash flow, and you have to pay to store it. So it's a negative cash flow investment, whereas a government bond might yield you 4 or 5%, or at least it did back in the good old days. So if one of their clients comes to a money manager and says, I want a safe portfolio, they'll say, well, we'll put you in government bonds where you're guaranteed to get paid back and you'll earn some money along the way. Well, now that government bonds are at or below zero in a lot of cases, the cash flow advantage over gold has evaporated. And nobody in their right mind would own just dollars, which is all a 0% bond is. It's just something that pays you some dollars each month and then pays you your original dollars back at the end of the bond's term. Nobody in their right mind, looking at a chart of the U.S. or the Canadian dollar versus gold over the past 30 or 40 years, would rather have dollars than gold. And since there's no cash flow disadvantage anymore to gold, you might as well buy it. You might as well own gold instead of the cash you would have owned otherwise. And there's no reason to think that that's going to change going forward. We can never raise interest rates again. Never, ever. You and I will be a fond memory of our grandchildren or great-grandchildren before interest rates ever go back up again in the developed world. Or we'll have a currency crisis followed by a currency reset in which we go back to the gold standard, then maybe interest rates will go up a little bit. But the current system will never raise interest rates again, because that will break so many budgets if they have to pay higher interest rates, that it would cause a cascade failure of the financial system. So here we are in basically the most perfect situation that you can imagine for silver, and a very good situation for gold. Which means silver is going to be one of those things that we look back on and wish we'd mortgaged the house and bought everything we could. All the silver coins we can get a hold of right now. And that doesn't mean anything about the next 6 months or year, right? Silver or gold could go down. They could have horrendous corrections in the short run. But in the intermediate to longer term, there's virtually no doubt that in this world, barring, an alien invasion or the Yellowstone supervolcano going off or something like that, the monetary system is going to trend in a direction that's favorable for precious metals.
Is the historical range a valid indicator still?
Well, yes, it is, but since silver is out of the historical range now for the gold-silver ratio, it probably means that we're at a really extremely attractive moment for silver, because the historical range has held pretty well for a long time, with good reason. There are relationships out there with most major indicators like stock PE ratios and long-term interest rates and the gold to silver ratio. There are reasons for that relationship. And when something deviates dramatically from a historical relationship, then you have to decide between one of two alternatives. One is that the relationship no longer holds, and the other is that you've got a screaming signal to do something. And I think it's 99% probable that it's the latter for silver. It just got way out of whack with gold because of how terrifying the past couple of months have been, and because how quickly industrial demand fell. But what we'll see going forward is investment demand more than making up for the fall in industrial demand, and that pushing silver higher.
We'll have more with John Rubino right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to silverradio.fm. Available online at howstreet.com, talkdigitalnetwork.com.
Welcome back. We're speaking with John Rubino. John, I think you talked about this, but what does the big gap between the spot price and the physical price mean for silver?
It means that there's a shortage of silver coins right now. Because the spot price is what it takes to buy, big silver bars, the things you turn into silver products. And coins normally cost more. They charge a premium because it takes a little money and effort to turn a bar of silver into a bunch of silver coins. So you got to pay for that. But today's premiums on silver coins are outrageous. And what that means is that there's a shortage of silver coins relative to the demand that's out there for them. And that's a good sign. Historically, that happens once in a while, and usually it presages a big move up in precious metals. So I don't think that this is a great time to go out and buy a bunch of maple leaves or silver eagles because of the high premiums, but I do think it's a sign that they're going higher. So this is a tricky time. It would have been much easier to buy your silver last year than it is right now. But see, dollar cost averaging is almost always the way you want to do this, because there's no way to predict prices in the short run. So if you just commit a certain amount per month to the precious metals part of your portfolio, and then don't sweat it. It's actually a good thing when prices go down, because that means you get more for that given dollar amount. And then just let it run. Let the program run, and over a period of years, you'll build up a nice portfolio of precious metals at reasonably favorable prices, because you bought more when they were down and less when they were up. And that advice still holds, because this is super unpredictable. What's happened lately, very few people predicted it right before it happened. And very few people will correctly predict the timing of the resolution of it. In other words, when things go back to relative normal with premiums that are reasonable, making gold and silver coins an attractive thing to buy a lot of. So in the meantime, just dollar cost average.
How high do you see silver going in this cycle?
Well, here's a very simple equation that shows you how high silver can go. If you say gold's going to $5,000 an ounce, which it really should be in this kind of a market, and that the gold-silver ratio is going to go back to 50, let's say, then you get up above $100 an ounce for silver. And that just requires two fairly easy things in this world. You know, for gold to double and a little more from here, which it has more than done in its previous upcycles, and silver's relationship with gold to go back to just kind of the mid-range of its historical range, and then boom, you're in triple digits in U.S. dollars for silver, and it can go a lot further than that. For instance, Jim Rickards, who among several other guys who I trust on this subject, has run the numbers for a currency reset and said we need $10,000 an ounce gold in order to go back to some semblance of the gold standard. So if that were to happen, you'd see silver rise faster than gold because it would be caught up in the general euphoria, and the gold to silver ratio go to maybe 20 or something like that, which means we're talking, you know, very high numbers for silver. It could be a Bitcoin-like trajectory for it, and the people who have a bunch now will, if they can manage to hold on all the way to the end of the process, will be very rich. So I think it's unlikely that most people will hold on all the way. So that's kind of an unrealistic number for most people. Most of us who own a lot of silver are going to sell along the way, on the way up, and take some profits over time until we're completely out towards the end of the process. But even so, you make a lot of money in that kind of a run. And that's the kind of thing that is, again, nothing is guaranteed in the future, but some things are highly likely, and this is one of those things, that we're going to screw up the monetary system on a monumental biblical scale. Safe haven assets like gold and silver and a few other things are going to do very well in a world where the fiat currencies are crashing in price. And silver will do better than gold because silver is a thinly traded market that tends to go up more and down more than gold. So in good times, it will, if gold goes up 5 times, silver will go up 10 times or more.
How do you store physical silver once you buy it?
See, now that is a tricky question because there is no perfect way to do it. Along the spectrum of ways to store silver and gold, at one end is putting it in a vault, having someone store it in a vault for you, then insure that vault and charge you a storage fee of, let's say, 1% a year. That's in most circumstances fairly safe if you choose the right storage company. You know, you want to choose a really well-regarded one and make sure that they are very well insured. But it's not guaranteed. All kinds of things that all of us can imagine happening in the world could happen to make that silver inaccessible. So that's something you want to do with some of your silver. It just depends on how much you have. If you've got a lot, some of it should be stored in a vault, preferably overseas in a safe place. So the U.S. government going crazy doesn't directly threaten that part of your capital. Further in, there's a safe deposit box, for instance, at your local bank. And again, in normal times, that's a safe place to put your will and some jewelry and your passport and stuff like that because, you know, it's very rare for safe deposit boxes to be emptied out without your permission. But that does happen. The banks get robbed. The government can change the laws, and they might want to see what's in everybody's safe deposit boxes and take out what they disapprove of. And historically in the U.S., that was gold. They made it illegal to keep gold anywhere for individuals from 1934 to 1971. So you couldn't legally keep it in a safe deposit box. And if you went to your safe deposit box, a policeman had to go with you and see what you had in there and take your gold away. So that's again, in normal times, a fairly safe thing to do, but it does have its risks. And at the other end of the spectrum is where you keep it yourself, on hand, hidden in a safe place on your property. And that's the best way to keep track of it, right? And the best way to make sure you've got it when you need it. But it's also got some risks to go along with it. You can be robbed. You can tell the wrong person that you've got it, and that can get you into all kinds of trouble. And it's not a question of just not telling anybody, or not telling anybody except the very important people who have to know about it, because someone who breaks into your house can just put a gun to one of your loved ones' heads and say, "Give me your gold and silver," and just guessing, hoping you have some. And then in that case, you have no choice but to go get it and give it to them. So nothing is guaranteed in this world, and storage of physical precious metals is high on the list of things that are definitely not guaranteed. So what you want to do when you're confronted with this kind of a set of options, each of which have pluses and minuses, is diversify. Do a little bit of each, right? If you want to have a fair bit of precious metals, then store some overseas in Switzerland or Singapore or someplace like that in a vault that is highly insured by a top-of-the-line storage company, and then pay the storage fees. Some of the rest can go into a safe deposit box. Some of the rest can be stored at home, and in that way, you end up. I actually have some stored in a closet at a friend's house. I don't recommend that necessarily, because you've really got to trust your friend, and hope they don't get robbed. But there are lots of things you can do, but none are perfect. So you want to make sure that you don't put all your eggs in one basket when it comes to storing precious metals. But I think there are ways to do it right that don't guarantee but increase the odds dramatically that at least a fair chunk of your capital survives whatever comes.
We'll have more with John Rubino right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to silverradio.fm. Available online at howstreet.com, talkdigitalnetwork.com.
Welcome back. We're speaking with John Rubino. John, are the silver mining stocks a buy at current levels?
Yeah. If you think silver is going to do well, then the silver miners are kind of options on the silver price. In other words, they're leveraged ways to play precious metals. And the reason for that is that, they dig the silver out of the ground, they refine it, and then, or they process it, and then they send it to refiners. And when the price of silver goes up, it makes not just what they produce this year go up in value, but everything that's in the ground goes up in value too. So the mining stocks tend to move more dramatically than the underlying metals, which is terrible in bad times. We've seen the miners underperform horrendously over the previous 3 or 4 years. But in the past year and a half, they've started to perform a lot better as gold and silver have gone up. But we're nowhere near the manic phase of this process yet. When gold looks like it's breaking through 2,000 and headed for 3,000 in U.S. dollar terms, and silver starts outperforming gold, even though gold's going up, then the mining stocks will just go crazy. So you want to be in some good quality silver miners when this starts to happen. Now, a lot of them are already up somewhat, but they're down historically still. They're way below their all-time highs, but they're near their 12-month highs. So they're still fairly attractive in terms of thing over the next 3 to 5 years. Again, what happens in the next 6 months or year, totally unpredictable. They could go back down and test their 12-month lows, which would also be their all-time lows, by the way, in a lot of cases. But in general, they're probably going to be really good investments over the next, say, 3 years, and great investments over the next 5 years. So yeah, you should be looking at good quality silver miners. And then the way this dynamic works is sort of the way the gold-silver dynamic works, where you start off with the least risky, and then when people get really excited, they move down the food chain in the market until at the end of the process, people are buying, untested exploration companies that happen to have silver in their name, and their stocks are rocketing. And that's where you want to be there when that happens, and you want to start selling your silver mining stocks to the people who are buying the little crazy untested juniors. So that means you should probably start, again, dollar cost averaging your way in now. Start feathering your way into silver mining stocks if you're not there already, with the intention of having a nice big position when the crazy part of the market starts to happen. And to understand what that means graphically, just go look at the chart of silver since 1970, for instance. It went from, a few bucks an ounce to $50 an ounce in the 1970s. Then in the 2000s, it went from a few bucks an ounce to $50 an ounce. And the stocks of the silver miners went up dramatically more during that time. So you can look at a chart of silver and then, double it, and you get a sense of what silver stocks are liable to do when the time comes. So assuming you buy the whole story of, we're creating too much new currency to bail everybody out because we've over-leveraged the financial system, and that's going to impact the big fiat currencies and make them go down, and we'll have inflation. If you buy into that story, which I do, then the precious metals are a great place to be. Silver is a better place than gold, and the mining stocks are a better place to be than the metals, and the silver miners are a better place to be than the gold miners. So, you kind of have a spectrum of risk that you can take on to play this. And it's up to you to decide temperamentally what suits you. You could just load up on gold and do just fine. You could buy a bunch of silver along with your gold and do even better in the best case scenario. Or then you can jump into mining stocks and really swing for the fences and try to have, a 1-3 year period that take care of all the financial needs of the rest of your life. So it just depends on how much risk you're comfortable with.
What could derail the silver story?
Well, if the whole inflation thing never works out because we fall into a deflationary abyss, in other words, if we drop into a 1930s style capital G depression in which the prices of everything are falling and everybody's going bankrupt and there's no real reason for something that is an inflation hedge, because even the value of currencies are going up while the price of everything else is falling. Because when prices fall, that's the same thing as saying a currency is getting more valuable, right? Because you measure the things that are falling in a currency. So in that kind of a situation, silver would lose twice because it's an industrial metal, and if industrial demand plunges, then that's a big part of its reason for trading, and that goes away. And if there's no reason for an inflation hedgy kind of asset, then investment demand dries up, and you can see silver back in the $2-3 an ounce range in U.S. dollars. The reason I don't think that's likely is because, yes, you have a tremendous amount of bad debt in the world. And that's deflationary because bad debt can't be paid off, which means the entity that has that debt is going to default, and that's going to bring down that entity's creditors and so on until, the economy just craters. And left to itself, left to just market forces, that's what would happen now. We would have a monstrous deflationary crash. But things aren't being left to themselves. Against that huge but finite amount of bad debt, we've got central banks with unlimited electronic printing presses. They can make literally an infinite amount of currency if they want to. For instance, with the U.S. Fed, it is literally no harder for them to create $10 trillion than $1 trillion. It's just that you're typing stuff into a computer and pressing send. And that amount of money shows up on J.P. Morgan's balance sheet or in the treasuries of a bunch of Fortune 500 companies. It's very easy for them to do. And because it's just make-believe money, they don't even really think about these numbers. They just, they're thinking right now, all right, well, the $2 trillion bailout didn't really succeed yet. So what if we try 5? And then when that doesn't work, they'll say, oh, let's do 10. And they will continue that process until it works. In other words, until the economy stops collapsing. But by that time, it'll be too late for the currencies because they will have created so many new dollars and euros and yen out there that people will correctly perceive that in a world that's not collapsing, you really don't want to hold these currencies that are in such surplus. There's so much of them out there, so many individual pieces of dollars and euros and yen that you want to get rid of them as soon as possible. Cash them in, buy real stuff. And then you get what's called in Austrian economics a crack-up boom, where the price of real things just skyrocket, which is the same thing as saying the value of the currencies collapse. And that's when you get the crazy stuff I was talking about for gold and silver. So I think that scenario is a lot more likely just because the central banks of the world have no limits. They literally can produce as much money as they want to. So why should they allow a deflationary collapse? If they have to, they can buy up the entire private sector of the U.S. and Canada. They could just buy all the stocks and all the real estate if they want to with newly created dollars. And they won't hesitate to do that if it comes to it, because the alternative is too horrendous for them. And so that's why I'm pretty optimistic about precious metals, because those are the places you hide out when crazy things like I just described are happening.
When fiat currencies collapse, will silver be part of the next monetary system?
Well, see, that's going to be an interesting debate, because we have to have a monetary system, right? And if the current one doesn't work anymore because the currencies that we've created fall in value to the point where nobody wants to touch them anymore, we have to change to a new monetary system. So what are we going to move to? And there will be a huge debate among people who want to just stick with what they call modern monetary theory, where governments just create as much money as they need and spend it as they see fit, and that's that. Or people who want a hard and fast gold standard. In other words, a return to the classical gold standard that was in place for 200 years prior to World War I. And then people who are in between and who want to throw cryptocurrencies into the mix. So it's not guaranteed in any way what we end up with, but it's completely possible that silver could be a reserve asset and therefore a form of money in the next system. I think it's probably more likely that it's just a gold standard, but it could easily include silver too. And it just, it really kind of depends on who has the most persuasive voice at the time. I would like it if there were gold in the central bank reserves and counted as or silver along with gold in central bank reserves, but we'll see. It's possible that silver will be in the mix, but even if it's not, its price action will be so astounding on the way to that point that most holders of silver will be more than happy to sell at that point, and then just book their profits in whatever currency we come up with next.
California has now mandated that brand new homes have solar roofs. Is that a positive for silver?
Oh yeah, it's a very big deal for silver. See, for a state to do that has a really positive effect on renewable energy, because one of the big problems with rooftop solar right now is that it's kind of expensive to convince individual homeowners to do the deal, to put solar panels on their roof. So you have big marketing costs if you're a solar panel installer, but making it mandatory on every new house eliminates the marketing costs then, right? If you're a solar installer, you're just on the list of companies that the state calls or that the builders call to do that one contracting job for each new house that goes up. So the cost of solar power goes down dramatically in that kind of an environment, and it becomes an even better deal than currently, when it's already a pretty good deal right now. Its cost has been falling dramatically ever since the 1970s and shows no real sign of slowing down. But this turbocharges the process, at least in California. So it brings us closer to a time when we don't need electricity generated by coal or natural gas. So if you can use solar power plus batteries, you're pretty much self-sufficient. You do that with your house and you're, potentially off the grid. You do it on a utility scale, and you don't need any of these other sources of sources of power. You can just do it with solar and batteries, at least in Southern California, where the sun shines most of the time. So I think that it's a good idea, and because each solar power or each solar panel using today's technology includes a little bit of silver, that kind of guarantees a certain amount of silver demand over the next few years in California. And since California is a huge state with a vibrant housing market, it could be significant for silver. Now, that's not something you can count on in the long term, because there are other kinds of solar technology that don't need silver. But right now, as long as silver's cheap, there's no real pressure for builders and solar panel makers to adopt those new technologies, which are slightly more expensive right now, to get away from silver, because silver's not costing them that much. Now, when silver goes to $50 an ounce, there will be pressure to go to these new technologies, and then that's a different conversation. But right now, and for the next couple of years, California's new law is extremely positive for silver.
John, thank you so much for chatting with us.
Thanks, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble. His website, dollarcollapse.com. If you have any questions for John or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on silverradio.fm are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at howstreet.com, talkdigitalnetwork.com. Silverradio.fm is a production of House Street Media Incorporated. Executive producer is Tom Allen.